Hi everyone, welcome to Eco Learning Classes. This is Professor Geeta Mahesh. Dear students, today we will be discussing with respect to fiscal deficit. What we will be discussing? Fiscal deficit. So fiscal deficit is very important for 6 marks. So here, what is fiscal deficit? Before we take a fiscal deficit, there are other types of deficits. First one is budget deficit. What is budget deficit? Okay, what is budget deficit? Budget deficit where total expenditure of government is greater than total revenue of the government. That we call it as budget deficit. Then what is revenue deficit? Revenue deficit. Revenue deficit means we are going to talk about only revenue budget. In revenue budget, if revenue expenditure is greater than revenue receipts, then this condition we call it as revenue deficit. Then what do you mean by fiscal deficit? To understand this fiscal deficit, first let us understand few things. Okay, as already I told, revenue expenditure, government expenditure. Let me take it as government expenditure. If we consider government expenditure, there are two types of government expenditure. One is revenue expenditure, another one is capital expenditure. See here, revenue expenditure is classified into revenue expenditure and capital expenditure. So here you can see classification of expenditure is divided into revenue expenditure and capital expenditure. Then if we consider government revenue, the government revenue has two types. You can see classification of receipts. If we consider government receipts, we have revenue receipts and capital receipts. So here government revenue includes revenue receipts plus capital receipts. Now you have to understand clearly, dear students, what's capital revenue. See, if we consider capital revenue, revenue receipts. Under revenue receipts, there is a tax revenue and non-tax revenue. But if we consider capital receipts are of two types. Okay, one is debt receipts. All those things which creates all type of revenue which creates a debt, that we call it as debt receipts. And there are other type of capital receipts where you will get a money in the form of non-debt receipts. What is debt receipts means? When you borrow from anyone, there will be liability on government that you have to repay. Okay, that we call it as debt receipts. Then what is non-debt receipts means? Sometimes government is going to sell government shares or its property. When it is going to sell shares or property, the financial asset or asset of government will decrease and they will receive a revenue or receipts by selling all these things, but it does not create any liability on government that in future they have to repay. There is a loss of asset, but it is not a burden on government that they have to pay back the debt. So that is why it is called as non-debt receipts. So here it is very important. This concept is very important. Debt receipts and non-debt receipts are very, very essential to understand fiscal deficit. I repeat once again, what is fiscal deficit means? In a simple meaning, I can say borrowings of government, we call it as fiscal deficit. In short, but simply you cannot say that fiscal deficit means borrowings of government. You have to give elaborate explanation. So what is that elaborate explanation? Means here fiscal deficit is equal to clearly try to understand government expenditure, which we call it as total expenditure, minus, in bracket we are going to split like this, revenue receipts, how to deduct, minus debt, non-debt receipts. You have to consider, dear students, here you have to consider only non-debt receipts. This one only you have to consider. Non-debt, okay, non-debt receipts. That's it. If we deduct this one from total expenditure, deduct revenue receipts and deduct non-debt receipts. Okay, so here if we deduct like this, then what is left out? Some amount. For example, total expenditure is 10, revenue receipts is 2, and by selling shares and also they got how much? 2 rupees. Okay, 10 rupees is total expenditure. Tax revenue and non-tax revenue 6 rupees they got, and 2 rupees by selling shares. Now from 10 if we deduct a 6, we will get a 4. From 4 if we deduct, we will get a 2. So for 2 rupees there is a shortage. For 2 rupees they will borrow from us. What they borrow amount, no, this 2 rupees, that we call it as fiscal deficit. And these 2 rupees is borrowed, means it is going to create a debt. This we call it as fiscal deficit. Let us understand this fiscal deficit in detail. I hope you understood whatever the example I took with that itself. Still, we will go through. Fiscal deficit, it is the difference between government's total expenditure and its total receipts excluding borrowing. Excluding borrowing. See here, fiscal deficit is equal to total expenditure minus, clear makla, minus revenue receipts plus non-debt creating receipts. So we are excluding debt creating receipts. We are not including in this. If we take a difference, what I told, 10 rupees, 6 rupees plus 2 rupees, if you add, you will get a 8. So 10 minus 8, the left out is 2. This you are going to borrow. That borrowed amount we are excluding. And that borrowed amount itself we call it as fiscal deficit. 10 minus 8, what is the difference? 2. This 2 we call it as fiscal deficit, and that fiscal deficit leads to borrowing of the government. See here, fiscal deficit is equal to total expenditure minus revenue receipts and non-debt creating receipts. What are non-debt creating receipts? Sale of government shares or property. We call it as non-debt creating receipts. Here, non-debt creating capital receipts are those receipts which are not borrowings. Therefore, do not give rise to debt. They are recovery of loans and proceeds from the sale of public sector units. They have taken a good example of total expenditure, that is 12.6% of GDP is the government total expenditure. Out of this total expenditure, the revenue receipts by tax and non-tax revenue is 8.1% of GDP, and non-debt receipts, that means here we told no recovery of loans. When central government gives loans to state and union territories, it will recover those loans along with the interest, that as well as sale of public sector shares. Okay, so when they are going to sell, they are going to receive a receipts, and those receipts we call it as non-debt receipts, and this accounts 0.6% of GDP. Then fiscal deficit is equal to total expenditure minus revenue receipts plus non-debt receipts, that is 12.6 minus, if we add these two, 8.1 plus 0.6, you will get a 8.7. If you deduct, you are going to get 3.9% of GDP. We call it as fiscal deficit. So when there is a shortage of funds of 3.9% of GDP, then government is going to borrow or issues a new currency in order to finance government expenditure, and that itself we call it as fiscal deficit. So fiscal deficit is equal to total expenditure minus revenue receipts plus non-debt receipts. So your gross fiscal deficit, how you will calculate? Gross fiscal deficit is equal to net borrowings at home. So government will borrow, right? I told government is going to borrow. What is the shortage? 3.9% of GDP. Now they have to raise funds. How they will rise? They will borrow at home. Okay, net borrowings at home and borrowings from RBI and borrows from abroad. So your gross fiscal deficit includes borrowing at home, borrowing from RBI and borrowing from abroad. This fiscal deficit is financed through borrowing. Okay, thus it indicates that you should remember always fiscal deficit will be financed. How they are going to finance? By borrowing. So that itself, borrowing amount, we call it as fiscal deficit. Okay, total borrowing requirements of the government from all source, we call it as gross fiscal deficit. What is this net borrowings at home? Means direct borrowing from public through small savings and indirect borrowing from commercial banks through statutory liquidity sale. Okay, that is one method. Another one is gross fiscal deficit is a key variable in judging financial health of public sector and stability of the economy. If fiscal deficit is very high, then the financial status of the economy is very bad and the stability of economy will be very weak. Okay, so here always we should have very less fiscal deficit. It is good for the economy. Revenue deficit is a part of fiscal deficit. What is revenue deficit? You know very well. Revenue expenditure is greater than revenue receipts. Okay. So what is revenue expenditure? It is expenditure incurred for normal functioning of an economy, not for making a investment. That means they are not going to create any fiscal assets or income generating assets. Such type of expenditure we call it as revenue expenditure, and this revenue expenditure is a part of fiscal deficit. If revenue deficit is there, then it is dangerous for the economy. See, our fiscal deficit is equal to revenue deficit. What is revenue deficit? Revenue expenditure minus revenue receipts minus revenue receipts. Then with respect to capital expenditure minus non-debt creating capital receipts. So here borrowings, non-debt creating assets other than borrowings you have to consider, non-debt creating receipts you have to deduct from capital expenditure. From capital expenditure, if you deduct a non-debt creating receipts, the left out amount whatever you are going to get, that plus revenue deficits, if you add, you are going to get a fiscal deficit. Okay, a large revenue deficit is more means indicates large part of borrowing is being used to meet consumption expenditure rather than investment. So we have to take care of government expenditure and its revenue in such a way that there should not be any revenue deficit. Even if there is a deficit in a capital budget, it is not dangerous. But if there is a deficit in a revenue budget, then it is very dangerous because they are using for unproductive purpose. Primary deficit is a fiscal deficit minus fiscal deficit minus interest payment made by the government. It measures the, it is a measure of primary deficit which is obtained by deducting interest payment from the fiscal deficit. Okay, from fiscal deficit, if we deduct the interest payment made by the government, then whatever the left out you are going to get, that is the primary deficit of the government. Dear students, if you like, please like, share and subscribe to my channel. Thank you so much.